Happy New Year, everybody. I'm Dale Pinkert, head trader and trading mentor at ForexStopHunters.com. What we do is in our name. Consider having me as every hunting party does. They have a guide. I also want to let people know that only risk capital should be used when trading speculative investments. You have to be able to afford to lose the money you have in that type of account, and that past performance is not indicative of future results. In this video, I wrote a piece about my FX resolutions for 2011. Sometimes when you read something, and teaching being our mission, so that you become independent of rather than dependent on us, a visual lesson can at times expand upon what is written. Some people are more visual learners than others. So that's my objective of this video. And my first resolution is a key question I'm going to ask myself as a trader when I look at my charts is this: where are the stops? Where are the buy stops? Could it be above this high? Where are the sell stops? Could it be below this low? I've had members ask me, well, Dale, how do I know where the stops are? And I realize that not everyone has been doing this for over 3 decades, where I could just pull up a chart and it becomes pretty obvious to me. So the next step would be to diagnose where the stops are, is to ask yourself these questions. If I was long, where would I place my sell stop? If I'm short, where would I place my buy stops? And the answer to those questions will tell you where the stops are, because there's obviously going to be some type of swing high, swing low that you're willing to risk that will not be violated. And as we teach at ForexStopHunters.com, it's exactly that mentality that builds blocks of stops above those obvious points. I've written about this too. In olden days, market guru Joe Granville said, what is obvious, what is most obvious, is obviously wrong. And that's a thesis for our trading method of stop hunting. So ask yourself those questions, and I believe you're going to be able to diagnose where other people are going to be placing their stops based upon what you would say to yourself. Where would my sell stop be if I'm long? Where would my buy stop be when I'm short? That's resolution 1. Resolution 2 is, after you've diagnosed where you believe the buy and sell stops are, that you're going to find a way to exploit it and be there to take profits on that event, rather than being the ones that are having their stops elected, either protecting profits or preserving capital with certain type of risk parameters. So what you're going to do for your second resolution is, I believe the stops are under this low, so how am I going to exploit it? So obviously, if you really believe that, you're going to look for reasons to be short before we get to this point to exploit it. Or if you believe that there's still some more short covering ahead, as you could go to maybe a larger time frame. Maybe you believe that the pound has upside to get back to the mid 150s or upper 150s. Or maybe you're becoming bearish and you know, looking at these lows here, that people that are bottom picking this pair, their sell stops are here. So a lot of it also has to do with your market bias as to what you're going to exploit. If you're obviously bullish, you're going to be looking to exploit buy stops. And if you're bearish, you're going to be looking to exploit the sell stops. That's resolution number 2. Resolution number 3 is that I resolve to only buy the relative strength leader in a group and only short the relative strength weakness of a group. This has a bit to do with correlations between pairs, and for this I'll use both the euro USD and GBP USD. So how do I go about determining this? This is something else that we teach so that people have a different mindset of realizing when a market is doing something right. Here's the November 30th low in GBP USD. Obviously, you see we had a bounce, but then they took out that low. Compared to Euro USD, here's the November 30th low. While the pound was taking out its November 30th low, Euro was putting in a higher low, which makes it the relative strength leader over cable. So we have that diagnosed, so our preferred long is going to be Euro USD, which held a previous low, over cable USD, which violated a previous low. And you just invert it when you're talking about weakness. Say, for example, I believe that we're getting very close to where the dollar may begin to reassert itself. So I'm going to be looking to be long risk aversion currencies. Here's a Swiss. Let's go to dailies. Took out its low, correct? Then we'll look at USD CAD on a daily basis. Took out its low, but not as much as Swiss USD did. In fact, these were both stop hunt examples that I called on Twitter and in the room that I didn't believe there'd be a low till the vultures cleaned out sell stops in Swiss here and in Canada. Finally, not only on the daily charts were stops taken out, but a call I made is that it was going to take place on a weekly basis, and the April low was violated on Friday. That the low here in April was 99.29. We got down to 99.24.5, so stops have now been elected here. Whereas you look at the Japanese yen daily, it has not taken out the low. We still have a higher low in USD Japanese yen. In Canada, on the daily, finally did it. Correct? Whereas the Swiss was the first one to do it. So the relative strength leader on a risk aversion basis would be yen, which has not made a new low, followed by USD CAD, which finally made a new low, followed by Swiss. So I've diagnosed the risk aversion currencies as which ones would be my preferred long. And in this example, it would be the US dollar yen not making new lows, not making new lows. There it is. Okay. And getting back to the selling the relative weakness, if Euro is acting better than cable, which I think it is, look at Euro. We're about to attack this stop hunt back above 154.97, whereas cable isn't. So my preferred short's going to be cable USD when I believe the dollar is going to start heading back up rather than Euro USD. That's my third resolution. My fourth resolution is more about trading technique, and I'm sure many have experienced the fact that they're trying to execute an entry and exit at a limit order, and they're unable. It's my contention that you enter your trades at the market if you're within a handful of pips of your area. Therefore, say for example, you had a price order in here and you're unable, then you watch the market go without you. If you had paid 5 pips more than your limit order, you'd be there. And even if you're wrong, you just lose 5 extra pips on the stop out. Now, I would rather be wrong for the additional 5 pips, then miss the opportunity. This is opportunity cost. Also, I've noticed a lot of traders, when they're waiting for their targets, will sit there and not trail their stop. They're looking for another 10, 15, 20 pips while their stop is 50 away. You're inverting the profit-risk ratio. You're being penny-wise, pound foolish. So I believe at times limit orders limit your success, and use market orders. Okay, now my fifth resolution is not to hold positions into major news events. Example being a non-farm payrolls report, rate decisions by central banks, because then you're not trading. It's more like roulette, where you're betting red or black on the outcome of the news. But I would prefer to react to the news rather than guess red or black like a roulette bet. That's my fifth resolution. The sixth resolution is learning to be paid every day. Say you have a full lot on, you're up 40, 50 pips into one resistance level. You take half off and you're paid. Okay, like I was on Friday told people to take half profits on their long Euro USD position from here. Although we're not at my objective, I'm paid. Then you begin to trail your stop to protect profits, but you still have something on should the euro trade back over 135. You're still there instead of being flat. So the way to be patient is to take partial profits, and if the market pulls back, I still believe in the trade. Then I'm risking profits rather than principal as well. So I hope that this visual display gave you an idea of what my resolutions are. Trading is very much about discipline. At times, I'll admit, do what I say, not what I do. We're all human. At times, emotions get to us and cloud our judgment and decisions. I recommend you write all these resolutions down and make it a habit of asking these questions: where the stops are, how do I exploit it, which is a relative strength leader, which one is demonstrating relative weakness. Trade with market orders. Don't take positions, at least large positions, into major news events, and learn how to take partial profits and trail a stop. So this is Dale Pinkert. This is what we teach in our room on a daily basis at forexstophunters.com. Happy and prosperous 2011 to all. Good hunting.